Hey, good evening, everyone. thanks for giving me your time. And this is Mark, from Right Line. And what I wanted to show you tonight was our trade was our trade analyzer. And I'm going to start off by demonstrating its two components, and then actually showing you the analyzer, showing you the setups, and showing you how you would use it as a tool to really cherry pick the best trades from multiple markets. Now, the first thing I just want to give a little preamble on market analyzers, trade analyzers, trade scanners, however you want to refer to them. And just before I start, I just want to throw in this quick disclaimer. It's a mandatory disclaimer that all signals and trading opportunities provided both orally, written, or electronically that are disclosed to visitors or subscribers are for educational demonstration purposes only. Right Line Trading takes no responsibility for any participation by visitors or subscribers within the futures, forex, or stock markets for profits or losses that may be incurred. Everybody, I'm sure, who's listening to this understands that you can lose a substantial amount of money. Therefore, the participation by trading may not be appropriate for everybody. And those of us here at Right Line are not registered financial advisors. We're not licensed trading advisors. Okay, with that said, before I move into the components, I just want to talk a little bit briefly about trade analyzers, trade scanners. It all depends on how you want to refer to them. They've been around forever. And essentially, they all look at the same thing, all of those that are around that I know of. I'm sure that, there may be outliers and trade scanners and trade analyzers that I haven't seen. But essentially what they do is they look for chart patterns. They look for rising triangles. They look for falling triangles. They look for areas of consolidation. I mean, those are the ones that I have seen. And any scanner that is going to try to get you into a trade based on a chart pattern is going to fail a significant amount of time. These are chart patterns that a lot of traders, a lot of software vendors out there are trying to push on you. They're rising and falling triangles. They're breakouts of consolidation. There's that famous J-hook pattern that I don't want to talk about the name of the person who claims he's made tens of millions of dollars trading the J-hook pattern. But they've been around really for 25 or 30 years. They do have validity, and they do tell you a lot about what traders are thinking, but they're just simply not reliable patterns. If you try to scan for them, they will fail again. They're going to fail a significant period of the time. And I want to alert you to something that's now present in the market that makes those scanners even less efficient than they were in the past. And that is the dominant position that institutional money now plays. Now, a rising triangle, a falling triangle, all of these patterns, listen, Japanese candlestick patterns are all important markers of trader sentiment. They do tell you what traders are thinking in the majority. But when institutional money intercedes, they take that and they smash it. And they really lead to all of those types of scanners failing. And that's really one of the reasons. In the last 5 to 6 to 7 years, institutional money is now a substantial percentage of the total volume in many of the markets that we trade most commonly. So if we really want a scanner that's going to work for us, we have to use one that points us into the direction of institutional money. It tells us when institutional money is in play, shows us the direction that institutional money is moving the market, and gets us into the market early. And this is really essentially what I'm going to show you. Now, I'm going to start from the beginning, and for some of you out there, this is going to be redundant, but there's a lot of new people in the room to listen to this. So I really want to start from the beginning. I'll try to move as fast as I can, but it really does underlie the basic principles that make our trade analyzer so powerful. Now, the first is that we use an oscillator. Now, I just want to give a little bit of background on on the man that developed the oscillator, what he developed it for, and what it tracks. It's one of the most misunderstood indicators out there, and it's an indicator that's very commonly misused. And there's very little information on YouTube and on the internet on how to leverage an oscillator appropriately to help you trade. You're going to find a ton of videos about trading divergence, but you're going to see why divergent signals now in today's era fail to a significant degree. They're not going to make you profitable. Now, first of all, what does an oscillator do? And what it tracks is momentum. And the man who created it was George Lane, who was a very, very brilliant mathematician. And he made the assumption that momentum, or speed of price changes, occurred before the change in price of the financial instrument itself. And at that time, he was completely correct. I believe he was correct back in 1957. Now, momentum is a second order derivation, and that's why it has forward-looking ability. And to give you an example, and I always use this example. If a car is moving around a racetrack at, say, 100 miles an hour, and it does not accelerate or decelerate, its momentum is constant. And if we used an oscillator to track its motion, the momentum assessment would simply be flat, would not be moving up to the 80 line or down to the 20 line. Now, if the car began to speed up to 110, 120, 130, 140, now it's gaining momentum. And what we're looking at is the rate of change in speed. So as that rate of change begins to increase, then momentum will begin to increase. So because it was a second order derivation, and I'm going to talk a little bit more about it, he believed that it foreshadowed reversals when you saw bullish or bearish divergence. And let me show you exactly what he was looking at. Now, I really pretty much already described this. Now, and before I show you the next slide, what I want to do is just quickly show you the oscillator formula. Now, this is the stochastic oscillator. If you want to understand what you're trading and how your indicators work, you really need to take a quick look at the formula that underlie the lines that are created by their assessment. And the stochastic oscillator is brilliant, but it's pretty simple. It looks at C, which is the most recent closing price of whatever financial instrument that you want to trade, and then it creates two other metrics. L14 is simply the moving average, is a 14-period moving average, or the average price of the lows of the previous 14 candles. And H14 is simply the moving average or average of the highs of that 14 period, of those 14 periods. It can be daily, it could be hourly, it could be minute. So it creates a moving average low, a moving average high. And as the close of the candle starts to approach the high of a move, momentum is rising. And as the close of a candle begins to approach the moving average or the average close of the lows, then you have momentum that's decreasing. And that's how that percent K line is created. The percent D line is simply a slower percent K line. It's a 3-period moving average of percent K. But what we're really interested in looking at is the percent K line. We don't care about the percent D, and we're going to eliminate it. So back in the day, in 1957 and in 1960, in the 1960s and the 1970s, when there was no institutional money or very little institutional money at play, and the market was driven almost solely by commercial traders like us, small traders trading relatively small lots. You know, there were always the big lots placed by the institutions, but they weren't electronic and they weren't constant. They didn't drive market price. So for the most part, the power of every buyer equaled the power of every seller. And that's a very, very important concept that underlies divergence. It also underlies Japanese candlestick patterns. 400 years ago, when the Japanese rice traders created Japanese candlestick patterns, they made the assumption that the power of every individual buyer, for the most part, equaled the power of every individual seller. This is true of Elliott wave. This is true of Gann theory. They basically looked at the market as a closed system in which the forces that drove price were essentially equal. And those were buyers and sellers. So back in the day, when price accelerated up to this high with this much momentum, and then retraced, and then accelerated up to the same high, but it accelerated up to this high more slowly. Its acceleration was diminished. So the rate and change of speed of the price as it moved up was less. You got a smaller amount of momentum. So it created divergence. Now, if you shorted this divergence signal, you would have taken some heat because price tried to make another high, but it only did it with the same amount of momentum as it did in the previous move. And here it didn't get as high. And that heralded or was the harbinger of a crash in price, was this decrease in momentum. And I believe back in the 50s and 60s and 70s, divergent signals were probably very accurate and very lucrative to trade. I mean, charting back then was very primitive. There wasn't any, these electronic platforms hadn't been developed yet. But because, again, there really was little institutional money at play, and it was simply you and I, and for the most part, the small players, whether you were trading stocks, futures, or Forex, these signals were very accurate. And I just gave another example. This is where price makes a higher high. So it accelerates up to here with this much momentum. Then it accelerates up to here with the same speed and the same momentum. Now, a higher price should always be associated with greater momentum. It should accelerate up to that higher price with more momentum. It should accelerate up faster. Because it didn't, it was the precursor to a gigantic fall in price. So momentum essentially really does lead price. It just only does it in a market where there's no institutional money at play or little institutional money at play. So the way we have to trade momentum is a lot different. And the way we have to trade an oscillator is different. Now, back in the day, and this is an old chart I got off of the internet, of Facebook, you can see every time the oscillator or %K line crosses the 20 line, which is the oversold line, and heads up, get a buy signal, and up it goes. This is a failed sell signal. And then this cross of the 80 line, the overbought line, down, gives you a nice short. And this cross of the oversold line, the 20 line, gives you a nice long. Now, back in the day, again, I bet this was very common because, again, you're assessing momentum and you're looking at an overbought, oversold metric. And in those days, overbought, oversold metrics worked. As price moved off the mean, there was a tremendous pull back to mean price. So overbought, when it finally gave up the ghost and momentum turned, it was a nice signal to take the trade in that direction. But now things have completely changed, and institutional money controls the direction of the market. It creates the trend. If you want to continue to trade divergent signals, or trade rising and falling triangles, or trade chart patterns, they're going to fail because institutional money is going to push the direction of the market in its direction as long as it chooses to. And it is not going to stand aside until it decides to. And we can't know when that's going to happen. So this is a very important concept that I think if you come to this webinar and just want to learn one thing, and I don't care what anybody else tells you or what any software tells you, I am telling you what is a mathematical axiom and is absolutely true. In this day and age, where institutional money drives the direction of price, there is no such thing as overbought and no such thing as oversold. And there is no indicator that can ever be created that can call a high or can call a low. I mean, there's stuff out there that you can buy for $20,000 that'll tell you supposedly when the S&P is going to make a high. Well, good luck with it, because the S&P is going to make a high when institutional money decides it's going to make a high. And you can see the S&P, I don't know exactly where it is right now, but it's approaching all-time highs. I may be wrong, but I know a lot of stocks are approaching their all-time high. And they're going to continue to rise until institutional money steps aside and starts to drive the market down. And there's no indicator or any mathematical analysis that will ever be able to tell you when that high is going to be reached, ever. There are valid areas of support and resistance, but those will break or hold depending on the whim of institutional money. So what I've done is sort of create rules for trading in this era when institutional volume rules. And again, this is something else that I think, if this is the only thing you take home with you, this is really important. Again, is there's no such thing as overbought or oversold. This is a fallacy now. Markets reverse at the direction and at the whim of institutional money only. I mean, if you trade crude oil like I do, if you trade the NASDAQ like I do, you can never predict the top. I mean, institutions can drive up crude oil for 60 or 70 or 80 ticks, And you see all these counter trend traders getting caught in that counter trend direction, calling tops over and over and over again, and just getting run over and over and over again. Finally, there'll be a top when the institutional traders step aside. The market will reverse, sellers will come, and what drives the market back down is that the mathematical principle of reversion to the mean still applies. When institutional money steps aside, the market will snap back to mean price more rapidly if it's been pushed up really far. The more standard deviations above the mean it's been pushed off of that mean price, the more power it will have to snap back. So you can get a big counter trend move. The problem is predicting when it's going to occur. And these are what these traders are trying to do. They're trying to jump on board and leverage that big move back, say, to the 50-period moving average, which we can use as our mean price. But they're just wrong too many times. So we can't get on board a counter trend move because we can never predict when it's going to occur. So trading divergence, which is a counter trend signal, is tantamount to trading against the flow of institutional money. You cannot do it. And our trade analyzer understands that and doesn't use the oscillator to try to get you into a counter trend trade. We could do it if we wanted to. It could signal you into counter trend trades by alerting you to divergence. But if you did, it would be an analyzer and signal system that got you into a lot of losers. What it can only do is put you in the direction of institutional money, and it does that extremely accurately. So what we're going to do is we're going to look at buying and selling pressure, and we're going to completely ignore any potential divergence signals. And we don't want an oscillator that was formatted to look for divergence. And the basic I'm blocking on it, but the basic formula for the stochastic relative strength, Williams percent K, are formulas that were created to track divergence. So we don't want to use any of those formulas. And you're going to see later on how they fail us if we use them to try to get us into a trade in the direction of institutional money. But they're always sniffing out potential divergence, and we are not. So let's look at the Laguerre, because the Laguerre is what we use. And the Laguerre oscillator is really very different than all the other oscillators. It's a very complex formula, and this is really the code for the Laguerre. It has a defined gamma. We define the gamma, but you can define a gamma factor, which determines the speed of percent K and the stability of percent K. And also it has multiple filters, which also factor into determining how fast that percent K line is going to move and how stable that percent K line is going to be. So by defining the gamma and the filters, we've created an instrument that is used to track money flow, not to track divergence. Now here is the signal, and I just wanted to, if you've been in the room before and you've listened to me talk, this is going to be a little bit redundant, but this is an important component of what the analyzer is looking for. What it's looking for is a lock of the Laguerre long, where buyers have controlled the market to such a tremendous degree that they've locked the Laguerre above the 80 line and keep it there. And as long as it's there, you're going to continue to have buying pressure. Now, for 20 years, what traders have been doing is looking for a counter trend signal to fade the market short. But you can see here how that's not going to work. Now, if this gets you into a trade where the Laguerre is locked long, you can see how the legs there are on this market. This is a QQQ 30-minute. And I want to stress this is instrument dependent and time independent. Doesn't matter if you trade a 1 hour or 3 hour, whether you trade a 5 range, an 8 range, or a 13 range, you trade a 5 minute, whether you trade, it doesn't matter. You can't trade a Renko because a Renko doesn't have wicks, and no oscillators will function on a Renko chart. But you can trade modified Renko, where you do get wicks, and any other candle formation. And you can trade any time frame and any instrument. Now here is where the oscillator is going to, the Laguerre will signal you in. You get a lock, and you just take the trade short because institutional money has locked the Laguerre below the 20 line and kept it there. And it's not easy to do that. Commercial traders cannot lock this Laguerre down and keep it down. Only big institutional money. This is a 60-minute of the Qs. So if you want to get a great trade, you're going to get in early as soon as this lockdown occurs. Now, this isn't enough, but this is one component of what we're looking at on our trade analyzer or scanner, depending upon what you want to call it. We're looking for great entries. Here's your lock long. Doesn't happen till here, but here's your signal long, and here's where bulls are firmly in control because institutional money is driving the market up. And this is a QQQ daily chart. No divergence. We're just trading in the direction of extreme buying pressure that only can be created by institutional money. This is a futures market. And here's the cross of the Laguerre, here's the lockdown, and it keeps you in the trade short all the way. Now you can exit on the out. This is not an exit system. This is a system to get you looking at a market with the potential for a great entry. Here's your lockdown short, and how you want to trade it. What your automated trade management strategy is. It's totally up to you. Now, I want to show you why stochastic is inappropriate and doesn't work for us. The Laguerre is going to get you into the trade here. The stochastic is going to get you into the trade here. But remember, stochastic is always looking for divergence. So it pops up above the 20 line on these two candles and takes you out. The Laguerre is locked down below the 20 line with this red all the way through. It's more stable. But when momentum truly changes, it pops rapidly. So it's got stability and accuracy, which is a rare combination. But it keeps you in the direction of severe, tremendous selling pressure, again, that can only be created by institutional money. Same thing here. Same thing here. Red, red. Now, the only thing I want to show here is that we not only do a chart assessment, we do a multi-time frame assessment. It's really part of the core methodology of this company that we never do an assessment based on one time frame. Now with momentum, it does have validity because momentum is a forward-looking metric, but it's still more powerful if we do a multi-time frame assessment. And so the trade analyzer is going to be based on the multi-time frame assessment of momentum. We want momentum locked short or locked long on multiple time frames to get us into a trade, to just really, to give us a very, very low risk, high probability winner, whether you're trading 25 stocks or 12 Forex markets, or you're trading 6, 7, or 8 futures markets. Here's the same thing, both red, and down you go. And now I'm going to move off the slides. I'm going to show you the system in a second. And I just want to put up another deck. I was going to make a lot of slides, but I just didn't have the time. But I do have a few that I want to show you. And I'm gonna put this deck in. And I want to scroll down. That'd be nice if I could find them. Hold on one sec. All right, you know what? I'm just gonna go right to the instrument. And if you would just indulge me, I have to take a 2-second break. I'm at home and I'm a single dad. My son needs me for 1 second. Give me about 90 seconds. Here's the system on the NASDAQ. We'll look at multiple instruments, and then I'm going to show you the actual trade analyzer, which is right here. So just hang on for 1 second. I shall be right back. And I'm really sorry for this delay. Let me just bring the analyzer up. It's right here, and I'll be right back. Hang on 1 second. Hey, thank you so much. In this era of pre-recorded webinars, at least you know this is not pre-recorded. Um, but I took care of the problem, and let's get back to it. Now, there's another component to the analyzer that is really, really key. And what I call it, we call it our Clarke Lines. Now, on the NASDAQ, there are two. And what makes this so difficult is each of these lines are individualized for the market that you want to trade. Like if you want to trade crude oil, this has to be individualized. If you want to trade the NASDAQ, it's individualized. Every one of them is unique. Let me set this up. This input is wrong. Let me just fix it. So it'll give us an accurate line. Let me bring the analyzer in. Let me explain to you the other component of the system because it's extremely powerful. I'm going to do that with Pink. I have slides, but I think this is a better way of explaining it. Everybody knows at this point, I believe, that no single market and no single financial instrument within a market moves independently of all the other instruments and markets. So if we're looking at crude oil in the futures market, it does not move independently of all other financial instruments. I mean, what takes place in the course of the day is the sector rotation of institutions rotate their money from sector to sector. And when the risk is on, institutions are going to buy stocks. When risk is off, they're going to move their money to safer financial instruments. So let's stay with the NASDAQ for a second, and let's take our examples. The quant lines, and I'll draw it to the two that we have. If they're green and they're green, what are they tracking? I can draw two straight green lines here. Just leave it like that and leave it like that. Now, the importance of them is they're not tracking the NASDAQ. They're not looking at price on the NASDAQ. What they are looking at is the price of this. They're looking at the multi-time frame trend of the Dow, the E-mini, and really, and importantly, the Russell. And they're doing it on two time frames. It's actually a multi-time frame done on two separate multi-time frame analyses. Now, if you want to take a NASDAQ trade long, isn't it a good idea to take it long when the Dow, Russell, and E-mini are also going long? Well, the same thing is true of crude oil. If you want to take a crude oil trade long, there are certain markets. Now, I'll only tell you one, which is natural gas. The other correlative markets are very hard for us to figure out. Well, what takes place is, now, in the Dow, E-mini, and Russell, all the quant lines correlate in the same direction. It's not always true. And in fact, a better example would be, let's look at Treasury notes. Now, if Treasury notes go up, what is usually happening with bonds? Well, bonds are going up also. But what's usually happening with stocks? Stocks are usually falling. And what that does is tell you the direction of institutional money. Institutional money is moving out of stocks and into treasury notes and treasury bonds. So some of the correlative markets in the quant lines are supposed to go down to signal when our financial instrument is going to move up. Because in this case, it's tracking not only where money is moving into, it's tracking where money is coming out of. So if you get a green, it's only one line on bonds, not two. So if you get a green quant line and it tells you that money is flowing into this financial instrument. Now, you can never actually track money flow. All you can track is its footprint. Now, if you have the long-term Laguerre assessment and the short-term Laguerre assessment, 3 greens, the trade analyzer is going to give you a long signal to get into bonds, treasury notes, excuse me, long. If you have the 2 quants, because we're tracking those 3 markets on multiple time frames, and both Laguerres, long-term and short-term, and all 4 of these lines are green, the analyzer is going to give you a signal to go long. And this is a very, very powerful time to trade. You're not going to get this occurring that often on any given financial instrument, which is why you may want to watch 8 or 9 at the same time. Now, unlike other analyzers too, you see we have input 8, input 13, and input 21. And you know what? The reason it's not functioning is because I don't have the data feed hooked up. Let me hook it up really quickly. Let me get to the control panel, and then it's going to light up. Here it is. Connect. All right. Here we go. Give it a sec. It's going to load. It's a loading. Okay, right now, it's telling us that every single instrument we're looking at is flat. We have no trades. Now, I was hoping we would get a green or a red on one instrument, but it's just not going to happen right now. And let's take a look at our NQ. Now, the important thing to know is which input to look at for which financial instrument. If you want to use an analyzer that has this kind of specificity and win percentage, you simply can't look at one input. Now, when we configure it for you, if you trade time, the inputs are going to change. If you trade range, the inputs are going to change. If you trade Unorenco, the inputs will stay the same. If you swing trade, the inputs will change. These are solely the inputs for a day trading chart that looks at Unorenco. Now, Sergio will configure it. I don't really have the expertise right now to open it up and show you how it's done, but it's really easy to do. Only we just really completed it in its present form. Now, on the NQ, you have to look at input 13. And here's the NQ. And you're going to take the signals off of this color. And you can see right now, we have no alignment. Here's our short-term Laguerre at the bottom. Here's our long-term Laguerre right here. Here's one quant is green and the other quant is yellow. We need green, 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 or red, red, red to signal you into a trade. And it's simply not here. And the 13 input on the NQ is flat. It's telling you no trade. Now, where would it go red? And let's take a right here. You can see now these arrows are not part of the analyzer signal. This is if you're going to day trade off the charts. When all four of these lines go green, this is where you've got your entry. And you can stay in this trade all the way up. There's no signal to leave. So this is a very, very big NQ trade. And I can tell you exactly how far it goes. It goes 26 points. I mean, that's in a massive trade. Now, these smaller choppy trades are simply not going to signal. You want the juicy trades, and you only want it to occur when you've got yourself a really nice trade. Now, right here, the analyzer is going to go red, 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 but you don't have an entry. You know, and here's your perfect entry right here. Now, I'm not looking at the time. Right there. I'm just trying to look for a pivot. There's a pullback and a continuation, and there's your entry long. So anytime you see four greens and a buy, what you would do is you'd keep the chart closed. This is what I would recommend, or relatively small. Like this. You want to trade 9 markets and just tile them. As soon as you see a 13 green long, you just pop the chart. Now, you may have to watch it a little bit. This is not a signal entry system. It's where there's a potential entry. So what you're going to need to do on 4 greens or 4 reds, let me just go back because I want to show you how to trade it. It's really easy, actually. Is you need a pullback like a wick, and then the 4 greens guarantee or help guarantee the continuation. You just can't jump into the trade, but it's setting you up for a potential great move. That's the best signal you'll ever see. Now I'll show you the E-mini. Now if I do this, it might drop Ninja, because every time you change the instrument in the window, sometimes I'll give it a shot because Ninja Trader loads so quickly. Let me just save this template. Just in case it drops, we can immediately reload it. And we're going to go to a 2 Unorenco first. And then we're going to dial in the E-mini. And it did it. Now remember what I told you about the quant lines. They're unique for every single financial instrument. So you're going to have to create your own individual templates to take out the quant line from the NASDAQ and put in the quant line for the E-mini. This is what gives this the specificity it has. Now here's the quant E-mini. Now I have to put that in panel 2. Now if we had templates, we'd be fine. And if I put that in panel 2, we're good. So now we've got the E-mini, which only has one quant line. And look at these beautiful trades. Right here is your pullback and your continuation on green, green, green. Pullback and continuation. Pullback, continuation. You've got 3 trades in a row, all on triple greens. And your trade management strategy is going to determine how you're going to manage the trade after you get in. But when you've got triple greens across the board, oh, and here it is again. Now, unfortunately, you don't have triples here. You're not going to get a signal, but you're going to get a signal right here. So it's 4 in the morning, and you're good. Now, this is not much of a trade, and that might be a loser. I'm not going to tell you you're going to get all winners. Actually, you don't have a signal here. If you'll notice, this is yellow, and the trade scanner will not flash. And so it saves you this trade. Here's your next winner. Here's your next winner. And here's your next winner. And you're signaled into these trades by the scanner. Now you can use this on essentially an infinite number of instruments. But this is what we're looking for. Right here. This kind of move. And you're going to see it over and over again. The more instruments you trade, right here. Now this is a crazy time, so I'm not even going to look at it there. Right here at 1128. That's a long trade. Doesn't go much. There's a nice long trade. This is going to be signaling buy all throughout here on these 3 greens. You will not find a better signal to tell you when to go long or when to go short. I'll show you on one other quick instrument. I'll show you on a stock. Okay? And it's very, very easy for me to show you slides and very, very easy to give you tailored entries and exits. I want to show you on a live chart. Now, unfortunately, like I said, the analyzer is reading flat. And we just don't have a trade entry on anything. Why don't we look at something I have in here? We'll just go to the futures. We'll pick a future. Let's pick the 6E. Let's let it load. Now we have to change the quant again. You have to take out the quant for the E-mini. You're going to configure these templates. Will help you. And you have to put in the quant for the 6E right here. We just have to put that in panel 2. Hit OK. And there's and here is our 6E quant. The Laguerre you do not have to change. What you have to change for the Laguerre is the 13 input goes to an 8. But these settings will all be there for you when we configure it for you. And we'll build your templates for you. This is a great long trade right here. There were many potential entries here. We just can't see the wicks in retrospect. And here's your great short entries right here. I mean, here's the pullback and the continuation and a trade. Here's a retracement long and a short and a trade. And you don't get a signal here. So the three reds really give you awesome trades. You're not going to get every winner, but I'm telling you, you're going to avoid 90% of the losers. And look at, see here? This is a great example. No signal here. Here's where you get triple greens. And look at that move on the 6E. That's gigantic. If I scaled that, you'd be really impressed. There's your next move. This overbought move, I mean, the move's extended. You lose one line. The scanner goes off and tells you stop. So what you get, and I'm showing this to you in real time. This is not conceptualized, nor am I cherry picking. You get a, this is 21, I think this is 21 and a half ticks, I believe. And this one, now this is from entry to maximum excursion. No, this is not. This is 2, 4, 6, 8, 10, 12, 14, 16, 18. This is 20 ticks. So this is 42 ticks. Every candle is 2 ticks. So these are huge trades. So that's the premise. That's how the scanner works. We configure it completely for you. What do you watch on the 6E? We're going to have to tell you. And if we made it any simpler, it wouldn't work. On the 6E, you're going to look at input 8. And you're going to look for a buy on input 8. On the E-mini, you're going to look at input 8. On the NASDAQ, input 13. On the Dow, you're going to look at input 21. On bonds, you're going to look at input 5. I didn't configure bonds and notes here, but that's where you're going to look for your buys and sells. So it's just not that simple as a buy green, sell red, because the market isn't that simple. But it's a tremendous tool to get you into great trades. You can watch 15 or 20 stocks. You can watch multiple Forex pairs. I don't have my FXCM set up. But the same thing, if I didn't tell you this was the NASDAQ or the 6E and told you it was the pound dollar, you'd see the same thing. These are universal forces that move price. It does not matter what time frame you're looking at, what financial instrument you're looking at. When it's tracking the flow of institutional money, when you got it in your direction with this much specificity, multiple time frame assessment of momentum, and the multi-time frame assessment of the correlative markets that show you the direction of money flow, you've got yourself a terrific trade. And let me just bring up the analyzer. I'm just going to go to questions. Now let me show you the offer we have. It is a special offer. And let me find it. It's right here. Now we're going to sell it by the market. Now our new website is up. If you go to www.rightlinetrading.com, you're going to see a brand new website. Now it hasn't been indexed yet. I'm really proud of it. Hang on one second here. I'll show it to you, and then I'll show you the offer. Let me just find my here it is. Hold on a sec. www. And it'll be up and running really, really shortly. It's taken us a lot of work. This is our new website. And it's got all the trading systems in it. And it's just real different than what what we've ever done before. So I don't know why I threw that in, but here's how what we're going to do is if you want one market, i.e. if you want stocks or futures or Forex, it's $4.99. The reason that we're selling it by market is because we have to give you, if it's stocks, we have to configure for you maybe 100 quants. For every stock that you want to trade, we need to make a series of quant lines for you. Now, Sergio can do that for you. For futures, we have to make a whole series of, we have almost all of them. And they're all done. And we have an enormous number of Forex quants. But you need all those quants to make this analyzer work. If you want one market, it's $4.99 lifetime. As we make it better, and we plan to make it better, you're always going to get those updates. It's $7.99 if you want stocks and futures or stocks and Forex. $8.99 for all of the markets. And no matter what you get, you're going to come into the live trading room with me on Monday. So that's the offer. And that'll go out right afterwards. I mean, if you're interested, you can call Rory. I'll give you the phone number and then I'll answer any questions. It's 786-713-5276 is our phone number. And Rory's helping me in this webinar, and he's got the phone. So I'm not totally alone here giving the webinar. So hang on one sec, and let me get the questions. I just have a million windows open, and let me bring the questions over. Hey guys, how you doing? Okay, hold on one second. It's being recorded. There is no way to pick tops and bottoms, Aaron. The red dashed line, let me go back, Diane. And you asked that at 6:30. If you saw a red dashed line on one slide, Diane, it's just not relevant to this analyzer. So I really can't tell you what it is. I mean, this is you get these indicators, and that's another thing. We're not just giving you the analyzer without the indicators. And we could do that. We want to give you the assessment as well so you can see it, not just take a dummy buy or a dummy sell when you get 3 reds and 3 greens. You're going to get the quant and you're going to get the multi-time frame Laguerre assessment right on your chart. So you can add that to your trading chart if you like. It's part of the analyzer system. So I just don't know, Diane. Automated is really right around the corner, Jeff. I mean close. And the automated is going to use all of this stuff, both short-term and long-term Laguerre, the quants, the whole 9 yards. The gamma 0.5, Richie, may be the default gamma for the Laguerre. You know, it's set right in the middle. The gamma goes from like 0 to 1. So I think that 0.5 that you saw on the slide that I projected was just the default gamma. Thank you so much, Arnie. You know, I'm a single dad. I got a 17-year-old kid, and it's me and him. So when issues come up, I got to take care of it, and I appreciate that comment. It's very, very kind of you. Very soon, Shalom. Very soon. I'm okay. Okay. Let me see, Shalom. All right, hold on. You know, Ron, if you stick with this, you're going to be close to 80% wins. Now, if you buy the system, I'm going to bring you into a webinar for all the traders who purchase this analyzer. and I'm gonna give you a few of the nuances that you need to help you trade it. Because even with the analyzer on 3 greens and 3 reds, there are certain things that I want you to look for. So you're gonna get that training along with the analyzer. If you just apply 1 or 2 rules, you're gonna trade close to 80%. It's a very, very accurate. You're not going to get those triple greens and triple reds often. And when you do get them and you leverage them correctly, you're going to get a nice win. And I would like to tell you that, oh, it's just really simple. You get a buy and you just put in a buy. You get a sell and you just put in a sell. That's what a lot of people are going to tell you. They're going to dummy it for you because they're not interested in making you profitable. They're just interested in selling you something. But that is not what my company's about, nor I'm about. If you come aboard, I want you to make money. And I'm going to show you how to trade this system. I'm going to show you how to trade it profitably. And if this wasn't going to make you money, I wouldn't proffer it. We've waited a long time before we put this out. And it's a really, really stellar system. Okay. If you call Rory, Christopher, he'll let you do it. Okay, Christopher, you just got to call Rory. Hey, David. David, I got your page and your text message. I apologize terribly for not getting back to you. I really actually appreciated your text message, and I'm going to get back to you, David. I'm going to try to do it tonight. It's just a single dad business. It's killing me right now. My son's about to graduate from high school, and I'm going at him a little bit out of my nuts. I'm going nuts, like you did. But I'm going to call you back, David. I promise you, and I'll give you all the time that you need. And page me or text me anytime you want. This is just the analyzer art, but it comes with the components that signal the trade. It comes with all the quants you need, and it comes with the multi-time frame gear. So you get these 2 indicators as well as the system, so that if you want to look at the charts, you can. Let's say you want to trade 4 or 5 instruments and you feel you can handle looking at the charts. Okay, you're going to get those 3 greens and you can see them. If you want to trade 9, 10, 12, 15, and you have to fold them up, you can just trade the analyzer. But you're being given also 2 very, very serious indicators as part of that analyzer. David, the reason I don't use it in the room is because it's just my trading method, and on Monday we're gonna hit it. I think the Nasdaq, like you wanted me to trade the E-mini and crude. All we need are 8 or 9 winning trades a week to make a grand. That's our goal. We're going to stay conservative, and I'm not going to go after different markets. If you're trading style, and I'm sort of selling against myself, but I want traders to use it in the right way. If you feel you have the capability of folding up 9 or 10 charts on futures, it's terrific. I don't think I have that ability. So I just trade what I consider to be my 2 money charts. If you trade stocks, it's awesome, because you may not get a stock set entry for 2 days, especially if you're on a swing trade time frame. If you trade Forex, it's superlative. You can trade 12 Forex pairs and wait for a perfect Forex setup. And if you can handle multiple futures markets, like bonds and notes are slow. And I may add bonds and notes to the room, but they're very expensive. It's $31.25 a tick in bonds. It's $17.25, I think, a tick in notes. Not going to get many trades, but those we can manage. So we may set up the analyzer for bonds and notes, David. Thank you, Jeff. Yeah, it's the indicators also are. Like I said, I'm not gonna trade you a dummy system that just tells you input A, buy, and you don't know what's going on. You're going to get the indicators also. We'll send replay. Diane, I'm not going to go into it now because it's just not a topic of this webinar, but I will have future ones on your topic, Diane. And I know you well, and I'm not slighting. I just don't want to. If I get off on a tangent, I'll be here till like 9 o'clock. Thank you, Philip. Okay, Philip, I'll make sure Rory's listening. I'll make sure he calls you. Okay, Philip. No problem, Jeff. Just give Rory a call. We haven't fired him yet. We're close, but we're not. We haven't fired him yet. You'll get the recording probably tonight because this isn't a 4-hour webinar. It'll render fast. Sure, it can screen for new signals, Ron. I'm not sure what you mean. Can it screen for new signals exactly? It's simply going to give you a green, green, green buy and a red, red, red sell signal. It's going to stay green and continue to stay buy as long as all three of those metrics align. It'll continue to say sell as long as all three stay red. My pleasure, Christopher. Hey, Art, we're both the right line trading guys. And Sergio. I mean, I'm the owner of the company. I created it, but Rory is really important part of this company, Art. It includes the DAX, Joseph. We have a DAX quant. Remember, I told you, as long as we have the quant to look at the correlative markets, the Laguerre will work. So you can use it on the DAX. I think it's a great instrument to trade the DAX or to include the DAX as part of in your analysis. No, David, I'm going to call you back. It's not okay, and I appreciate it, but it's not. You just asked me for 5 minutes, and I still have it in my text thread. I haven't deleted it, so I don't forget, David. Okay, Gary, just give us a call. They do come with this, Art. What you see, I want everyone to understand that what you see here, you get. I never project anything in a webinar that you don't also get in the purchase. Now, if you didn't get these indicators, I wouldn't show them. I would have just showed the market analyzer and just created JPEGs where you got a green 6E, and I would have shown you where it corresponded. The reason I'm showing you what you get, I'm showing these indicators, is because it's included in what you buy. I just want you to understand that. And I hope I'm clear. You're going to get this. Okay, thank you, David. Absolutely, this will scan for stocks. It does not care what financial instrument you're looking at. And we have complex quants for stocks. We spend an enormous amount of time on them. And we have, I don't know, a gigantic stock library. So it works on stocks, no problem, RK. Gary, just give Rory a call. Okay? You got it. No, Greg, we can't. I get so many requests on MT4. Right now, we're just Ninja. But you can run this on Ninja and take the entries on your MT4 platform. It's the only suggestion I have for you, but you can't put these indicators on MT4, and they're so complex. We've just caught up with getting them on NT8 because they're all multi-time frame assessments, and these are also here multi-market assessments. I mean, other platforms are so simple. They track one time frame and one financial instrument. This line here is tracking multiple financial instruments. So it takes us a long time to move to new platforms. No, this does not include order flow, Art. This is a different system. This order flow is not a component here. The order flow is going to be part of our auto trading system. Okay, this is different. Now, if you have the Laguerre order flow, just call Rory, and he'll help you with that. Yes, Scott. Visual audible alert. Right here. Yep, it'll beep. Now, it may drive you a little crazy, but we're very quickly going to get it to just beep once when it goes green and once when it beeps red. But you will get an audible alert. You know, if you're out getting a cup of coffee and you hear an alert, you can run back to your screen. Do you know something? I can't show you crude, and RK, I'm really sorry. And the reason is I only have a kinetic data feed. I don't have a CQG data feed. And here's my crude chart. It's blank. But let me tell you, I wish I could show you because crude works amazingly well. And I'm telling you, you can take my word for it. If it didn't, I would tell you, but I cannot bring up a crude data feed. I might be able to bring up a crude delayed feed, but I don't want to take the time because it's 722. Trust me, RK, crude does really well here. Really well. I mean, crude here is where you can get the 60 and 70 tick trades. Thank you, Richie. You do, and I did explain it, Louis. I explained everything. And if you missed anything, just we're going to send out the replay. Sure, no problem, Russ. Here's NQ right here. I have to go to the magnifying glass here, pull in the NQ, and pick the right month. There's your NQ. If you want, I just want to take a screenshot. Here, why don't I give you a good time to snap it? Now hold on 1 second, and just let me go to the. I have to put in the NQ quant. Remember, so I have to take out the 6E quant to move in the NQ quant. It's easy to forget. Put it in panel 2, and then you have to go to the long-term Laguerre and make sure the input is 13. And all these entries will be set up for you on your templates. Now you've got the NQ. And here's Friday. If you want to take a snapshot, I'll just leave it right there. And you can see how when you get these reds, now here you're looking for 4 reds, not just 3, but even 3 reds. I mean, your trend here is down, but you want all four to take a really low risk trade. I mean, we want the best of the best of the best trades. No problem, Russ. Yeah, we'll be sending out the recording out. USO, I don't have a stock data feed. You know, I may be able to put in USO. Let me see if I can. Hang on one sec. Let me just go to my control. But that's a great instrument that I would like to display. Let me see if I can do it, because that's a terrific trading instrument. And just let me try to do it. I don't have every single data feed up, but I might be able to get that off Kinetic. And let me see if I can. Here's my tools, instruments. Let me put in USO. Hang on one second. I've got to do it. I've got to do it again. Hang on one second. Just USO happens to be one that I'm actually interested in myself. Here we go. Instruments. Let me go to stocks. USO. All right, Kinetic is not allowing me to do it. I can't do it. But I'll tell you, I've checked this system on the Qs. I've checked it on the SPY. It works terrific on the QQQ and the SPY. I just don't have a stock data feed. I'm sorry, but I'm telling you, it doesn't matter the financial instrument. Believe me, it doesn't. You cannot auto trade this. It's not set up to be auto traded. I mean, we are developing an auto trader, and we should have that out in a week to 10 days. This is a discretionary system. I mean, you have to see the buy, you have to go in and open the chart, and you have to take the trade. I don't want to mislead you. This is not auto. You can trade ETFs on this, absolutely. It will work. Listen, honestly, it does not matter the financial instrument. It really doesn't. And ETFs, we have great correlative markets, because those basket of stocks have great correlative baskets. And our quant lines on ETFs are real good. And the gear is really going to track multi-time frame momentum excellently. I mean, you're going to get good ETF entries. Let me try, Lewis. I'm going to try ZB. Let me put it in. I know I have a data feed for ZB. And let me go to tools, instruments. Let me put ZB in. I'll show it to you. Here's ZB. Okay. All right, it should be in there. It's not, but it doesn't matter. Let's go to futures. Here it is. Here's ZB. All right, now the thing I have to do is I have to make a few changes for ZB. On the data series, this becomes a 1, 4, 2. And there it is. Now what we also need, you see see how the quants are not working, they're going orange. We have to go and get out the quants for the NASDAQ, remove, and put in the ZB quant. And you'll be able to know really well if you've got the wrong quant. It'll go orange on you, which means it's the correlative markets. Now here comes the signal. Now here's the quant, here's the multi-time frame, and here are bonds. Well, I'm missing a line here somewhere here. Now the multi-time frame Laguerre has to be changed. Now we'll build these templates for you. Don't be daunted by these inputs, because we're going to give them to you and set them up for you. Here we go. Now we've got it. Now let me put in more days to load. Let me go to data series. And days to load, let's put in 10. We'll just give it a minute to load. Okay. No, here are your trades, right here. Now, first target on bonds is very small. I would take 3 or 4 ticks, first target. Trade here, trade here. Here, you have no trade. Nothing here. This big move up, just can't catch it. You're not going to catch every winner, I can promise you. There's your great long trade right here. Triple greens. Up and away. You have no trade here. It's a nice move up, can't trade it. There's your entry. And that's a very lucrative trade on bonds at 31.25 a tick. Here, you just don't have anything in here. In this chop, no triples. Here's where we're looking for the entry. That's it. So basically, in 10 days, you get 1 entry here. There's no trades here. No trades here. No trades here. 2 trades, 3 trades in almost a week and a half. You're not going to get many. The only thing that matters is when you get an entry, you get a winner. The alignment is very, very specific. Cadillac winner, right here. That's 12 ticks, 31.25 a tick. If you trade that with 2 or 3 contracts, that's a $500 or $600 trade, and that's what you're looking for. Like I said, you're not looking for a lot of trades, you're looking for a lot of winners, and that's what you're going to get. Here, no trade. Your bottom Laguerre is yellow. Here, no trade. Bottom Laguerre is yellow. Here, no trade. Your top quant is yellow. So something is always going to hold you up. And you see this long trade, forget it. It's all right. When you get the alignment, you get the winner. The arrows are, we're going to remove the arrows, because for trading the scanner, they're not helpful. I was trying to do that right before the webinar, but I ran out of time. There are day trading signals if you actually look at the chart, but we're really just addressing the scanner here. No, they're not, Art. They are not. That was the last 10 days, Lewis. It was. Like I said, if you're looking for a lot of trades, I'm pretty sure that was 10 days. Let me look at the data series, because you're waiting for a perfect trade. And one of the biggest mistakes that day traders make is they overtrade. So I would not be surprised, honestly, I would be delighted that the only 3 entries that you found were 3 winners. And the fact that there were only 3 trades is irrelevant, because all you care about is getting winners. Now remember, if you're looking at bonds, you're not going to trade bonds alone. And you trade things that are going to give you multiple entries on a given day or many a week. Bonds and notes will not, just the way it is. They don't have a lot of volatility. when you get in, if you can get a 12-tick runner, you got a monster move. They don't move very far. Okay? All right, everyone, thank you so much for giving me your time. We'll send out a replay with a purchase link if you'd like to come aboard. You're also welcome to call Rory again. He's there, and we'll answer any other questions you have. And I'll just show you that slide one more time. Thank you, Louis. I really appreciate you giving me your time on a Sunday. And I can go make dinner. Parmesan, which my son has made out of chicken Parmesan. I can't, where are those freaking slides? My pleasure, Art. You have a good evening, Kevin. Well, I can't find the slides. I'll just put up our phone number if you'd like to give us a call, because Rory is there again. And you can go to the website, but you have to, it's 786-713-5276. And there will be a webinar for all those who come aboard. And I'm going to show you a few of the nuances. So you're going to get great trades. Thank you so much, Greg. I really appreciate it. All right, everyone, have a great evening, and I look forward to seeing you in the room on Monday. I'm looking to kill these markets tomorrow morning. Have a great, great evening. Bye-bye, all.